Hello, welcome to another episode of the Block Thrasher Daily Morning Update, where we are shattering the complexities of crypto. I am working as hard as I possibly can to help you make the best decisions that you can make with your cryptocurrency investments. Doing this through news, commentary, analysis, and education. It is March 2nd. My name is Justin Cummins. We've got a great show for you today. I'm very excited about it. Today we're going to ask this big question, right? Will we see the Black Thursday crash that happened in 2017 happen again? We're coming up on the anniversary of that event. It was on March 12th, 2017, that the market just tanked. Painful tank. Bitcoin lost over 50% in its value. Will that happen again? We're going to talk about that. Also, we're going to do our normal thing with our word of the day. We've got a good one. We're going to talk about current market prices and look at what Warren is saying about Bitcoin and Antonopoulos is saying about Ethereum. We're going to talk about Stellar and Ubisoft and Sorare and what they're doing. We're talking about Black Thursday fear. We're going to talk about Chiliz, which is bringing $50 million into the United States. Some cool stuff happening there. And then we're going to talk about the Cardano Mary hard fork and what that might mean. And if we have time, we'll get into 7 ways that you can make money with cryptocurrency. All right, let's jump over and begin with our word of the day. Comeuppance. Comeuppance. It is a deserved reward or just desserts, usually unpleasant. What is the origin of comeuppance? Comeuppance, just desserts, usually unpleasant, is an Americanism that first appeared in Harper's Magazine in 1859. The word derives from the phrasal verb come up as a case for judgment at a trial, and the common suffix ance, which forms nouns from verbs such as acceptance, from accept, or appearance, from appear. Now, how is it used? Here's an example. He is such a convincing villain, in fact, that we are all very pleased that he meets his comeuppance when a falling telephone pole impales him while he is searching for his cell phone. Comeuppance. Another example. The narrative is clear. Humans get their comeuppance. Nature fights back. Multiple cinematic disasters happen in the space of 2 hours. Comeuppance. Getting their deserved rewards or just desserts, usually unpleasant. Maybe another example to put it into our space would be those fraudsters and those people out there. Someone just the other day posted in a Facebook group where someone was trying to get somebody to send them Bitcoin in order to trade that Bitcoin for mining, and they were promising all kinds of rewards, and they wanted to give them a Bitcoin wallet with keys. They share the keys with us so that we can bring you this great return. Ridiculous. Hopefully those people that are trying to steal from those who are unaware will receive their just comeuppance, right? Comeuppance. C-O-M-E-U-P-P-A-N-C-E. For those of you on audio. All right, moving on to the next segment. Let's look at market prices today. Where do we sit in terms of prices? Bitcoin. Bitcoin is moving sideways. We have almost no change in the last week. Up 0.07% in the last 24 hours to $48,559.17. Ethereum is also moving sideways. I mean, these are like stable coins these days. What in the world? Ethereum is at $1,557.60. Well, hey, it is up actually. It's green. Number 1 and number 2 are green at least. Oh, what? Just changed. Just went red. Okay. Well, sorry about that. Cardano. Now, Cardano has had an incredible week. It is up 25.65%, down though in the last 24 hours, down 1.99% at $1.25. Binance Coin is up 7.47% the last 7 days, so it's had a good week, and it is currently at 4.13% in the red, $245.52. Tether, Tether's $1. It's just amazing. It's almost like it's a stable coin. Oh, that's right, it is a stable coin. Just kidding. Okay, Polkadot. Polkadot's starting to turn up the heat a little bit. Polkadot is up 5.03% in the last 24 hours, up 6.93% on the week. It is $37.11. Polkadot's looking pretty good at the moment. XRP is down 6.59% for the last 7 days. It is up 1.5% in the last 24 hours, however, at 44 cents. Chainlink is turning on the boosters a bit. Chainlink is the winner today in terms of price increase of the top 10. Chainlink is up 11.78% to $30.33, doing well. Litecoin is $179, up 3% in the last 24 hours. Very little change over the last 7 days, just up 1% essentially. Bitcoin Cash is in the top 10 at $533.68. It is up 7.76% in the last 24 hours, just up 1.6% on the last 7 days. Now, Stellar has been doing well. It is up 8.4% in the last week. It is up 1.92% last 24 hours, sitting at 42 cents. Uniswap has just like lit a fire this last week, up 20.72% at 9.98. It comes in at number 13. And XEM had an incredible week as well, up 33.97%, up 9.13% last 24 hours, currently at 73 cents. And Dogecoin has been pushed all the way down to number 15. It is currently at 0.05 cents. That said, Dogecoin is still garnering a lot of popularity. I say this because I posted a survey in a very popular Facebook group with 20,000 members or something like this. Which coin will be number 2 in 2022? Will it be Ethereum, Cardano, Polkadot, Bitcoin, Binance Coin? Somebody went and entered in Dogecoin, which, to me is just a ridiculous answer. If you understand the fundamentals of Dogecoin, it's not going to happen. People have been talking today about the news story that Dogecoin is going to be available at like 1,000, 100, I don't know, 1,500 or some large number of Bitcoins where, ATMs where Bitcoin is already available throughout the United States, and this is somehow going to pump Doge, right? But they put Doge in there, and Doge was like coming in after Cardano. Cardano was the number 1 top vote. Number 2 was Dogecoin, which just shows there's still a lot of people that don't quite understand the fundamentals of Dogecoin. And, hey, sure, it is possible that the coin could get large enough network effect because of this social media type of stuff that's going on and people like this for a while. But eventually, obviously, that kind of pump wears off because, as we've already discussed many times with Dogecoin, there is a huge amount of Dogecoin which is held by like 20 people, right? 40% of the supply is held by 20 people, and they can dump at any time. When you have a coin that is not distributed out, decentralized enough, and distributed out in terms of the holders enough, you have big problems because all it takes is one of those massive whales to dump, and boom, the price has gone down significantly. All right, moving forward to our first story of the day. Elizabeth Warren says Bitcoin is going to end badly. During her March 2nd CNBC interview, U.S. Senator Elizabeth Warren predicted that Bitcoin is going to end badly when asked for her take on Treasury Secretary Janet Yellen's comments about the flagship cryptocurrency. She believes that the top coin is speculative in nature. As reported by You Today, Yellen said Bitcoin presented an extremely inefficient way of conducting transactions in late February, on top of criticizing its illicit usage and volatility. Describing Yellen as a really smart woman, Warren claims that there was no room for ambiguity in her words. The Massachusetts Democrat is yet to make any public statements about how Bitcoin should be regulated. During a Senate Banking Committee meeting in 2018, which featured notorious cryptocurrency critic Nouriel Roubini, the Keynesian economist who, has never seen an idea to increase the money supply or to have the government print more money in any negative way. She made the case for nurturing the productivity of digital currencies while protecting consumers. It's interesting. That's all about making sure people pay their taxes. That's what all that KYC and AML stuff is about. It's been shown that it's completely ineffective. You know what KYC and AML does? KYC and AML is know your customer and anti-money laundering. And what it does is it's the U.S. government bringing in these regulations that make these companies, whether it's a cryptocurrency exchange, a bank, etc., take all of your information, your picture, your driver's license, your social security number, your address, everything. I mean, I'm surprised you don't have to send in a blood sample. And then what happens is all of that information goes into their database, which is not often, actually, I was going to say not secure. I'm not going to go that far, but I'm just going to say opens up the possibility that can be hacked. And it has been many times. Many companies have been victims of a hack, and their customers' information has been released. And so what it actually does is it doesn't protect you, right? The way you would be most protected would be if nobody knew what you were doing, right? But this is not what it's about. It's about making sure that they know, right? So that if they want to audit you, they can go to the centralized institution, the bank, the exchange, whoever it may be, and say, tell us what they did. We need to know this, right? So one goes after ultra-millionaires. The prominent lawmaker continues crusading against ultra-millionaires, reviving her controversial plan to tax the wealthiest Americans. Anyone with a net worth over $50 million would have to shell out a 2% levy under her recently introduced legislation. Warren's tax the rich, quote, tax the rich agenda was harshly criticized by some members of the cryptocurrency community back in 2019, with IOHK CEO and Cardano creator Charles Hoskinson calling it good old-fashioned theft. Now, I really, with these politicians talking about cryptocurrency, if they didn't have power and couldn't potentially cause harm to the space, I really wouldn't even want to pay much attention to it. And I'm not sure that Warren has much influence anyway. However, it is a little bit interesting. It is a bit interesting also just to see how they don't get it, right? I mean, so many holes in the statements that she's making here, but and in Yellen as well, saying that Bitcoin is extremely inefficient way of conducting transactions. And it's like that's like really like maybe that was something you could talk about 2-3 years ago when Bitcoin was basically the only thing that people were thinking about, or if all you thought about was Bitcoin, you didn't recognize that there's all these other cryptocurrencies with super high transactions rates and just incredible technology maybe crypto never will become a payment processing solution where you go to the store and you buy your coffee with Bitcoin or with another crypto, but that's fine. It doesn't have to be that. And it could be. Does it have the technology to do that better than Visa or MasterCard? Absolutely it does. Especially with the third generation cryptocurrencies like Cardano and Polkadot and others. But, they don't want to talk about that. They probably aren't even aware of that. That's part of the reason. They don't get that there's this massive, groundbreaking, just the other day, Mark Cuban, I mentioned it, said that smart contracts, he was talking about Ethereum, but the smart contract technology, the NFTs, which he's super bullish about and all this, is just going to destroy the legacy banking system. And he's absolutely right about that. But they don't see it. They don't get it. And, obviously, maybe they don't want it as well. Now, talking about Ethereum, here is Andreas Antonopoulos. Now, one of the things I want to do on this podcast and vlog and channel is introduce you guys to more people within the cryptocurrency space who are important thinkers or thought leaders. And Andreas Antonopoulos is one of these. Now, I'm going to talk a little bit about him. Actually, before we talk about him, let's just jump over to Wikipedia and learn a little about who he is. Andreas Antonopoulos. He was born in 1972 in London. He's a British Bitcoin advocate, tech entrepreneur, and author. He is host of the Let's Talk Bitcoin podcast. I'm going to put a link in the description of the video and in the podcast for you guys so that you can go check out that podcast if you want. Let's Talk Bitcoin podcast. It's a good one. So he's a host on that. And he's a teaching fellow for the M.SC digital currencies at the University of Nicosia. Antonopoulos obtained his degree in computer science and data communications and distributed systems from University College London as a partner in Nemoret's research. Antonopoulos researched computer security, stating that the greatest threat to computer security was not experienced hackers, but overly complex systems that resulted from rapid change in business. So his Bitcoin involvement, in 2012, Antonopoulos became enamored with Bitcoin. He eventually abandoned his job as a freelance consultant and started speaking at conferences about Bitcoin, consulting for startups, writing articles free of charge. According to his podcast, Antonopoulos is a consultant on several Bitcoin-related startups. In January 2014, Antonopoulos joined Blockchain.info as Chief Security Officer. In September 2014, he left the CSO role. In April 2014, Antonopoulos organized a fundraising campaign for Dorian Nakamoto, who was identified in a Newsweek article as the creator of Bitcoin. Satoshi Nakamoto. The reporting techniques used in the article were controversial among journalists and Bitcoin community members. The fundraiser intended to assist Nakamoto after the attention he received as a result of the article raised 50 Bitcoins worth a US $23,000 at the time. On 8th of October 2014, Antonopoulos spoke in front of the Banking, Trade, and Commerce Committee of the Senate of Canada to address the senators' questions of how to regulate Bitcoin in Canada. In March 2016, the first edition of Mastering Bitcoin was released by Antonopoulos. So that's a book that you can pick up. It's a good one in print and online, followed by a second edition in June 2017. So he's also the author of Mastering Bitcoin. Enough about Antonopoulos. Just wanted you to have a little bit of background of who he was, right? So here he's talking about Ethereum, and he says Ethereum's future is far more uncertain than Bitcoin's. But he doesn't mean this in a negative way, all right? When we dive into this a little bit deeper, he says Ethereum's future is a blank canvas compared to Bitcoin. He says that while Bitcoin's design is comparatively simple, Ethereum goes for general purpose, open-ended programs. He says this makes Ethereum more versatile, but at a cost. The cost is, quote, the cost is that in order for that system to be able to evolve, you have to have much faster iteration. You will stumble many times on that path. You're going to have some spectacular and catastrophic losses. It's the wild west of the wild west. It's Dodge City. So I see Ethereum, he says, as very complementary. I see it as being able to explore the far reaches of innovation that Bitcoin doesn't want to venture into, or shouldn't want to venture into, because that would undermine its primary function of doing robust money that resists even state-level attacks. So this is interesting because, a lot of people that were sort of OGs of Bitcoin are also maximalists, and they sort of want to, they call everything else a what coin, and they want to see them go away and disappear and all this sort of thing. Well, Antonopoulos is saying, no, I see Ethereum as complementary because it's going to do all these other kinds of things. It's going to explore, to put it in his words, the far reaches of innovation that Bitcoin doesn't want to venture into. Antonopoulos says the number of things that Ethereum is capable of makes for confusing market narratives. Sure. The future of Ethereum, of course, is much more uncertain than that of Bitcoin because Ethereum's use cases is so much more open. Because it is a programmable blockchain with so many different possibilities, you tend to get whiplash if you try to pay attention to what's the current model of what Ethereum is pursuing right now. Is it ICOs, like it was in 2017? Is it tokens, like it was shortly before and shortly after? Is it decentralized finance, which of course has been going on for the last couple of years? Is it non-fungible tokens? The simple answer is all of the above and whatever sticks, and that can be disorienting, confusing, and very much look like a scattershot approach to innovation. You know what? What he's talking about, though, actually extends way beyond Ethereum and goes into the entire space, right? Because if we look at the top 10 coins, a number of them, in fact, most of them, are platforms that are similar to Ethereum. We've got Ethereum, we've got Cardano, we've got Polkadot, we've got XLM Stellar that's up in that list, right? So these are going after all different types of innovations, and it's very true. We are in the Wild West right now. Who knows what's going to stick? Some of the stuff's going to stick, some of it's not. There's going to be some incredible things that come out and other things that won't. And so it's exciting time, though, right? Well, he says, continuing on, the introduction of blockchains in 2009 basically just demolished all the walls and gave the ability to anyone to innovate without permission, without authorization, and without oversight, and go in any direction they wanted and throw something out there in the world that is from the get-go global, robust, unforgeable, and scalable. And of course, that throws a big old disruptive monkey wrench in the entire established regulatory framework. The bottom line is that we have to embrace both the good and the bad of unfettered, wide open innovation. The good, we are now seeing the greatest level of innovation in cryptography, in distributed systems, and in financial services that we have seen in the past 300 or 400 years. And at the same time, we're seeing the most audacious scams and Ponzi schemes and pyramid schemes and thefts that are happening, and a lot of naive buyers and investors getting bamboozled. to use one of our words of the day recently. So there is a lot of defensiveness there. I'll tell you something. My ability to look at the technology that exists in other systems and say, I can be interested in the technology without thinking it's a good investment, as well as I can be interested in this technology without assuming that it's necessarily going to win or survive, comes from conviction and understanding of the strength and market fit that Bitcoin already has. You know, and I talked about this, and he's alluding to something that I've talked about a number of times before on this podcast and YouTube channel. And that is that it isn't always the best technology that wins. You know, Betamax versus VHS, and there's other examples all over the place. Blu-ray versus HD DVD, and it goes on and on and on. Now, the reason that happens is because you also have to build the market. You have to have good marketing. You have to have a network effect, right? Which is what that means. Network effect is that you're bringing people in who are actually using the system and using the product. And you have to have a system that goes about and does that. And so there are going to be some platforms out there that just have incredible technology that aren't going to get anywhere, simply because they don't have the ability to attract people to use that platform. And so that's something very important to look at as we're doing our analysis and we're researching the cryptocurrency space is, are these platforms, are these projects, do they have the ability to bring people into the network and grow that ecosystem, right? So we got to keep that in mind. All right, moving on to the next story of the day. And this is one of those systems which is often playing with the top 10 in terms of market cap. Stellar XLM, currently today at number 11, 41 cents. We looked at that a little bit earlier. Now, Stellar has released an update. It's called Horizon 2.0. Why is this critical for Stellar? Stellar developers fully revamped the architecture of Horizon, the client-facing API server for the Stellar ecosystem. Now, the point of interaction between Stellar Core and Stellar-based application works in a more flexible manner. According to an official blog post by the Stellar team, Horizon's 2.0 release of its API server is up and running. First of all, it eliminates the need to roll out the Stellar validator to interact with the blockchain. Alongside that, running a full-fledged validator did not make sense for the majority of use cases. Thus, with Horizon 2.0, its API instrument can be activated separately. While running a validator, a client can contribute to the decentralization of Stellar or take part in crucial referendums on fees, inflation rates, and so on. So this is an improvement in the governance system. So with Horizon, a customer can track events in network, submit new transactions, and explore the current state of the blockchain, such as balances and addresses. So it's lowered the requirements and it's eased setup. With the new update, Stellar introduces modular architecture that optimizes the interaction between the parts of the blockchain system. The new version of Stellar Core, called Captive Core, can process ledgers entirely in memory, so there's no more need to maintain a separate core database. Wow, that's cool. Ingestion, the process of initially connecting two network instruments, now takes less than 1 day, while it used to take weeks even on high-end machines. Additionally, the process of running Stellar Core becomes far more memory efficient. The consumption of HD space is lowered by hundreds of gigabytes, the team assured. So Stellar, moving in good directions, making some nice gains. All right, moving on to our next story. Ubisoft. Obviously, Ubisoft is this just gaming giant. It's this huge leader within the gaming industry. So this is good news for adoption right here. Gaming giant Ubisoft partners with Ethereum-based NFT platform Sorare. What are these guys doing? What are these guys doing? Each week, players will receive points based on the performance of the 5 players they selected. They will not get to select these 5 players again during the season. So the game will revolve around keeping a close eye on the Belgian competition. Each player's performance will be closely monitored by Optisports, a well-known specialist in soccer statistics. This will allow for a better assessment of each player's performance and resulting in a more accurate experience and point tally for the users. Sorare, if you aren't aware, is a blockchain-based fantasy soccer game where players collect and trade cards representing their favorite soccer players, then enter tournaments and win prizes based on these players' real-world performance. These cards are stored on Ethereum as non-fungible tokens, NFTs, and have been exchanged for hefty sums by avid collectors in the past. In fact, one card representing PSG player Kylian Mbappe was traded in January for 116 ETH. While that is an outlier, interest and prices have been steadily growing in 2021. Routine cards, rare cards, routinely sell between 0.1 and 1 ETH on OpenSea, which is actually quite incredible. So what's happening here, this is really great stuff. This is actually, let's just stop for just a second. When it comes to adoption, real world use cases, this is one of the biggest sectors that I think we're going to see just explode in coming years. We've had COVID-1984 hit. People are not able to go to the stadiums like they once were. They want to be involved though, and the gamification of sports with NFTs on blockchain and everything that can happen with that is just mind-boggling, and it is huge. It is huge, and we're going to see a lot more of this type of thing happening, where we're going to see big prominent players within the gaming industry, sports teams, and the like, partnering with cryptocurrency-based companies and platforms that are going to be bringing these kinds of products to the masses, and I think it's something we want to keep paying attention to. Moving on to our top story of the day. As I mentioned in the introduction, will Black Thursday happen again? Now, traders fear that Black Thursday might come back as Bitcoin returns in March mostly have been negative. Right? So Chinese journalist Colin Wu has shared that traders are worried as the first anniversary of Black Thursday is coming closer, and they fear there may be a comeback of Black Thursday. Chinese crypto journalist Colin Wu, who often gets insider information about crypto exchanges and other things to do with blockchain and crypto, has taken to Twitter to remind followers that the first anniversary of Black Thursday is drawing near. It's drawing near. It's drawing near. Oh no, what are we going to do? Investors and traders are worried about Bitcoin's chances of holding its current level in March. Wu has also shared a table with historical data that clarifies why they have grounds to fear a Black Thursday repeat. Less than 10 days left before March 12th. Wu reminds the community that there are less than 10 days to go before March 12th, the infamous day. That reminds me of, if you haven't seen the movie The Three Amigos, you've got to see it. I grew up watching that with all my buddies, and we just used to laugh like crazy. So I mean, maybe there's a bit of, maybe it's more nostalgic for me, maybe it's more a season of life, but there's this there's this scene where, like, the three of them, right, it's Chevy Chase and Steve Martin and Martin Short, I think it is, and they come out of the studio in Hollywood or whatever, and I don't know, they get rejected or something, or they get fired. I don't remember what it was, but they're standing on the side of the road, and the guy was like, I don't know, I thought we were going to be named, we're going to be, one of them says, we're going to be infamous. And the other one was like, what is infamous? And he's like, that's more than famous. Like, awesome, No, infamous, it's the negative, not positive. Anyway, the Black Tuesday, Black Thursday was infamous, which took place last year and made Bitcoin bleed 50% of its value in one day. The market massacre continued into Friday, March 13th as well. The stock market plunged, with even crude oil going below zero. Yeah, I remember that. I was like, heard that, and like, wait a second, crude oil is like negative? Wait, giving it away? No. Instead of selling it, you have to pay. It's complicated, but that happened for the first time ever. And partly what happened was there just wasn't the ability to store it. And so what happened was all these people that speculate on crude oil, there was just too much of a production and glut in the system, and so then the providers were like, no, you have to actually take physical delivery, and the people that were speculating, like, they're just traders. They don't have warehouses or facilities or infrastructure to store crude oil, so they're like, I can do that. So they literally were like giving it away. Like, they were paying people to take the crude oil that they had purchased, right? So it was quite a thing. Anyway, that happened at the same time as Black Thursday in the cryptocurrency market. So In his tweet, Wu also shared a table with Bitcoin monthly returns since 2011. The table shows that negative returns on investment have mainly come in March every year, a seasonally consistent pattern for Bitcoin every year. So far, this month, of course, we're only on the 2nd. What we've been seeing in the last couple of days is that the market is moving sideways. Well, there was a little bit of a downturn at the end of February. We saw Bitcoin drop down about 10%. It was at a high of 57,000, 58,000, and now it's come back down just over 45,000 at 47,689 currently, as we saw in our market overview. But yeah, it's just moving sideways. And if we continue to see that through March, that'll actually be a win in my view, because as Wu is pointing out here, historically speaking, March has been a month in which the market goes down. Only in March 2013, when BTC printed 171% growth, and in 2019, when it went up 7%, has that not been the case, right? Now, what do I think is going to happen? Here's what I'll tell you I think is going to happen. This year, things are different. This is not really a year that can be correlated to 2017 and what happened then. And here's why. In 2017, there was an ICO craze, which was one thing that brought in tons of new retail investors. It was a time which we do sort of see happening now, similarly, but it was a time when people were talking about these astronomical gains. You know, some guy at work was like, man, I just bought this ICO and it went up 13,000%, and I just cashed out and I bought myself a house, and everybody was like, I want to do that. And so Ethereum just took off, and everybody was having to buy Ethereum to get into these ICOs, the initial coin offerings that were happening on the Ethereum network, blockchain. And so that drove the market up, and people were coming into Bitcoin because Bitcoin is the gateway, right? You grab the Bitcoin, get on the exchange, or get Ethereum, and then move into these ICOs and that sort of thing, right? So there were other underlying reasons why the market went up. But that created a bubble that got burst, and it got burst when the ICO thing just started to just fall apart. A lot of reasons. There were scams happening, people started to lose trust in things, and then also there was talk about were these unregistered securities, and so there was a lot of ambiguity, regulatory ambiguity about that brought uncertainty, and then fear, uncertainty, and doubt kicked in, and boom, the market just crashed on Black Thursday, and Bitcoin went down 50%. And it took some time. It took a couple of years before this new bull market has turned and started to come in, and we've gotten back not just to where the market was, but we've exceeded that by at least 2 times, right? How are things different today? The difference today is that we don't have an ICO craze at all like that. Now, some people might say there was the DeFi thing, but most of the DeFi thing is actually pretty stable. There was some, shenanigans and silliness going on with some of the liquidity pools and with some of the yield farming that was going on, where there were similar to those, anytime you see something where it's like 13,000% ROI, you've got to be, something's happening there that's suspicious, right? We saw that. There was one called Katana.finance, right? Which was a yield farming pool, So we got things like Uniswap, which was legitimate. Uniswap released their airdrop. Everybody that had used the Uniswap platform received 400 tokens per address. That was sweet. People made some serious money on that, especially if they've held on to that till today. It's worth over $10,000, right? Not a bad little gift, a little drop in the bucket of some cash, right? Anyway, Uniswap released that airdrop, and then if you took that, you could put it into the liquidity pool, and you could do some yield farming, and you could earn some more Uniswap. But it wasn't a ridiculous astronomical rate of ROI. If I recall, it was like 100% or something. It wasn't 10,000%. Katana Finance, on the other hand, had this astronomical rate of return, where if you took $1,000 of Ethereum and you bought $1,000 of Katana and you put them into the liquidity pool and did some yield farming, you could earn 1,000% of Katana, whatever, right? And so obviously the math didn't add up and everything. And what ended up happening was they just disappeared. Telegram, they were gone. Their Facebook disappeared. Their website was down, and people couldn't access the smart contract or interface to it and get those coins that were pulled out. And so people lost money. So this sort of thing was going on. However, that is very small. It's nothing like the ICO craze of 2017. So that's not a factor this time around. Also, what's different is institutional investors are coming in now like they weren't in 2017. I mean, it's just intense what's going on. We've heard everything from Tesla to MicroStrategy to Grayscale, and on it goes. We've got the CME stuff going on with Ethereum futures contracts, and we've got Bitcoin has been there already for for over a year, and so there's a totally different situation in that regard. Also, the regulatory concerns and the ambiguity that had people worrying back in 2017, like what's going to happen with cryptocurrency? What's going to happen? Is the government going to shut the thing down by declaring it illegal to own any? So if you're caught sending or receiving any cryptocurrency, it's a criminal act, that sort of thing. All of that's just been swept aside and is gone. And I do believe that in spite of this fear of Black Thursday hitting, that we're not going to see that happen. What we're going to see, I think, if anything, and obviously I'm not going to, I'm telling you what I think, but with the caveat that I can't pretend to know markets. I mean, are we in a bubble? We could be in a bubble. Could we crash back down to $20,000 Bitcoin? We could, certainly. The market is so small, though, and I've said this numerous times before, and I'll say it again. It's so small, it's so new, and there's so much room for growth in the positive direction. I mean, just unbelievable potential there for growth in the positive direction because the market's so small. All it takes is a few more institutional investors in companies like Tesla that want to throw more money into Bitcoin, put it on their balance sheets, or just the growth of adoption is coming to the really cool things. Like if you follow this podcast and YouTube channel, you know of these things that are happening within the space where there's some really revolutionary and transformative things that are happening. And DeFi, even though it's in its infancy and it's trying to figure things out, the DeFi space, the NFT space, these things are bringing real world use cases that are quite phenomenal, actually. And all of that makes me think that we're not going to see, we might at worst see a bit of a correction, but I think it's not going to be a Black Thursday 50% decrease in the market event. Now, if that does happen, all that's going to say to me is this is another great opportunity to stack, buy more, buy the projects that are doing things that are gonna last, and just load up on those suckers because we will have another bull market. And historically speaking, every time that bull market comes in, Bitcoin, for instance, and the total market capitalization, at least 2x's, if not more. And so all that does is bring an opportunity. Now, we don't know that's going to happen, so act accordingly. All right, moving on to the next story of the day. And this is out of Reuters. This is another example of one of the things that I was just talking about, where we can see some real incredible growth in the cryptocurrency space. Blockchain sports firm Chiliz is said to invest $50 million in U.S. expansion. So this blockchain sports venture company called Chiliz, what they do is they create tokens for sports teams. Now, interestingly enough, I couldn't actually pull up their page without using a VPN because Americans aren't allowed to partake in this. So the fact that they're coming to the US is interesting because maybe that's going to open up the door. What they're saying they want to do is they want to come to the US and they want to forge alliances and partnerships with sports teams here in the US. So what they basically do at Chiliz is they create fan tokens that allow fans to vote and to do surveys and to be rewarded. And so they approach these teams, and they're already big in Europe. And these fan tokens are fully fungible assets, meaning they can be exchanged. And every club that joins Socios, the website that does that where they actually do all of this is called socios.com. SOCIOS. So these fan tokens are quite interesting. And then they have an exchange, which if you're on the video, you can see on the screen now, where you can trade these tokens for these different teams with each other. And all of this is done with the CHZ, which is the Chiliz token, as the trading pair, right? So very interesting. If we look at this CHZ Chiliz token on CoinMarketCap, it is ranked number 108. Just another one that's like almost in the top 100 that you probably never heard of. And it is an Ethereum token, but they also have their own blockchain, so they're moving in that direction. It has a total supply of 8,888,888,888. I like that. All eights. 88888 now. That is the max supply, which will ever be. It is currently 6 cents. It is up 10.35% of late. And it is traded on some of the major exchanges: Binance, QB Global, HBTC, FTX, etc. Now, going back to the story and getting a little bit of the information about what they're doing, Chiliz is a company that is based in Malta, and it offers tokens to fans which allow them to vote in a series of polls and receive special promotions and rewards, creating what it calls a new digital revenue stream for sports organizations through engagement with global fan bases. So this obviously could be very appealing to sports teams because they can make not only they can grow community. And as Mark Cuban was saying just the other day in an interview that I saw him, every business that succeeds knows that building community is the number one thing. And that's been difficult to do of late because of the COVID-19 pandemic. The fan tokens are listed on Binance, one of the world's biggest cryptocurrency exchanges, and last week, Serie A club AC Milan became the latest team to launch their token, generating $6 million of revenue in the first day. See? Real world use case, very appealing to these sports is a huge, obviously, community already. And so to just bring people into that, to gamify that, and to use crypto to do it, it's intuitive. Like this is like a marriage that was meant to be, right? That move follows launches of tokens on the company's fan engagement platform, Socios.com, which I showed you, for other high-profile clubs such as Juventus, Paris Saint-Germain, and Barcelona. Cryptocurrencies and related tech have attracted a surge of interest in recent months as mainstream investors and companies embrace Bitcoin, the most popular digital token. Dreyfus said his company is now opening an office in the U.S. as they target the country's top sports franchises. A huge focal point for us in our global growth plans is the U.S. That's why we are opening a New York office and investing $50 million into the country's sports industry in order to launch fan tokens with leading franchises from the 5 major U.S. sport leagues, Dreyfus said. Now, if they're able to pull this off, this could be mind-bogglingly huge. Put it that way. This could be staggering. We head to the U.S. with a proven track record in generating millions of dollars of revenue for some of Europe's biggest sporting organizations. In 2020, we shared more than $30 million with our partners, but this year we are targeting a minimum of $60 million. Dreyfus said the fan market cap, a fan token price, and market information tracker run by Chiliz currently stands at just under $200 million, and that he expects it to grow with the addition of new European soccer clubs in the coming weeks. Chiliz are also in talks with Formula One and esports teams, he added. This is exciting stuff. This is really, really exciting stuff, and I think this is something to keep an eye on and to pay attention to watch, because this could just be huge. I love this. I mean, look at this exchange. It looks a lot like Binance, and you can go and you can buy and sell and trade you know, these teams, and I don't know how this works in terms of, is there any connection to performance of the team in its sports activities or not? I had to delve into that deeper, but um, this along with the idea of fantasy sports and tokenizing players and then doing fantasy sports games with players, and just what that opens up in terms of the gamification of it all connected to cryptocurrency and what can be done. Again, just mind-boggling. Very, very cool to think about. All right, enough on Chiliz. Moving on. Next story of the day. Wanted to bring to you guys a bit of a Cardano update. If you've been paying attention to the cryptocurrency space over the last few days, this has been all over the place. IOHK has unveiled that Merry hard fork happened last night, right? And it's also moving toward being completely 100% decentralized. Currently, looking in the Daedalus wallet, just this morning, it is at 88% decentralization. So yesterday, March 1st, 2021, the Merry hard fork was activated on the Cardano blockchain. Now Cardano is a multi-chain network. That's why it's important. Moreover, it can host assets from other blockchains with no need to deploy smart contracts. Now that is huge. Just wrap your mind around that for just a second. All right. So we've got these assets that are on Ethereum or wherever, Binance. And we have the issues with the fees, and we have the issues with the speed and the scalability and interoperability. Now, Cardano's been talking about interoperability for a long time. Charles Hoskinson's been talking about that. But this idea, and we're seeing this happen with bridges, right? Or if you want to, Binance has already done this. If you want to take an Ethereum token, an ERC20 token, and you want to move it over to the Binance Smart Chain, they've got a website. It's a simple, easy tool to do that. Phantom, we looked at Phantom yesterday. They're doing the same thing. But all of those are also done through smart contracts, right? Well, this is the difference with Cardano, is these are native tokens that are on the Cardano blockchain. So all of the security and all the features that IOHK has developed for the ADA token are available for these tokens, right? So Cardano developers can activate smart contract-free tokens. Now, just so that you know, with Ethereum, when you create a new token, an ERC20 token, you do it with a smart contract, which is complicated. It's difficult. You need to know the Solidity programming language. There's a barrier to entry there. Also, there are fees, right? So you're going to have to buy and sell ETH and that sort of thing. And that's part of the reason why we see so much congestion, because it wasn't scalable, right? And so they're trying to fix those problems. However, Cardano has none of these issues. According to a press release shared with U.Today, Input Output HK has implemented revolutionary functionality on Cardano with assets from other blockchains or non-native without smart contract deployment. It significantly reduces the cost of development process and advances the iteration between programmatic and non-programmatic blockchains. Assets representing the native tokens of other chains work similarly to Cardano's ADA coins. Also, the first major players in the blockchain market shared their plans to build on the Cardano ADA blockchain with post-Merry operational functionality. And I've actually talked about these before, so this is not really news, but they're just addressing, finding this out now, it seems. Namely, the blockchain-based lending platform Celsius Network. And so what Celsius Network is it's sort of like BlockFi, where you can go and you can deposit your tokens. It's centralized. It's not DeFi. It's centralized. And you can earn some incredible rewards, like up to 15% on stable tokens and close to 10 on some of the cryptos, on some of the not stable tokens, Bitcoin, Ethereum, whatever. So Cardano will be coming to their platform. It was basically all that's about. And also Singularity.net. Although I have not been able to confirm this as of yet, and this is not clear in this article, whether the Celsius token, which also did phenomenally well last year, like it was up 2,000-3,000%, will be going to the Cardano platform or not. It is currently an Ethereum-based token. Singularity.net also is an Ethereum token, which will be launching on the Cardano blockchain. And their token, they will run them sort of together for some time, with the Ethereum ERC20 token still live, and then with the Cardano token as well. And so we'll see what happens with that. But while I'm here, I've mentioned this project many times, but if you're new or you haven't heard before, this AGI token is the token of Singularity.net. And I believe that Singularity.net is going to be huge. And here's why. The top leading companies in the world today, every one of them knows how to leverage artificial intelligence within the functioning of their company. They have built, either bought, purchased, hired, brought in artificial intelligence into their, whether it be systems that track inventory or just customer relations, all kinds of things. There's all kinds of, like, artificial intelligence is a realm that is just set to take off and to explode. And so what Singularity.net is doing is they're creating a marketplace. Ben Goertzel is one of the foremost artificial intelligence experts in the world, and he's the creator and founder of Singularity.net. They are building a marketplace for developers to market their artificial intelligence applications, which are solving real world problems, and to not have to go through major corporations, but they can monetize it, they can develop it, they can sell it. And then what's really cool about this whole thing is that companies can go in sort of in a smorgasbord fashion. They can go, okay, we need a solution that does that, we need a solution that does that, we need a solution that does that. And what I'll bet you we will also see is a catalyst type of system, whereas within Cardano there's this catalyst system, right? Which is basically like, you can think of it as a GoFundMe for cryptocurrency for dApp developers. So a developer has an idea. I'm going to make an application that does X, Y, Z, and but I don't have the funding, so they can go into Catalyst. They can present their project and then get funded for it. And I bet you we're going to see that same thing with Singularity.net in terms of artificial intelligence. And so, there may be people out there that have the skills and the abilities, but they don't have the financing and they can't get it. And so instead of going to an Apple or to a Google or something and having to basically surrender it to that company and become theirs, proprietary technology that's owned by Google or Apple, whoever, Amazon, whoever it is, they can get the funding to create it and sell it and market it through Singularity.net. Same thing that we're seeing happening with artists, musicians, develop everywhere you go. People that are developing content, intellectual property, are going to be the chains are going to be removed. They're going to be able to not just monetize and capitalize on what they do, but they're going to be able to get funding to do more and to do better and to do what they wouldn't have otherwise been able to do. This is exciting stuff, people. I'm just telling you. So both of these, Celsius and Singularity.net, will be pioneers of Cardano's B2B adoption. As I mentioned earlier, full decentralization is expected to happen this month. Now, that is important. This article doesn't talk about it, but one of the main reasons why it's important that Cardano is going to hit full decentralization is, it's been speculated, and I think it's probably true, that the reason we don't see Cardano on Coinbase is because it's not totally fully decentralized. I would expect that when that happens, we should be seeing Cardano on Coinbase, which I think would bring a nice pump to the token. I can't imagine why we wouldn't. I mean, it's the number 3 coin, number 3 crypto in terms of market cap. It's a behemoth. I mean, it's just massive. They got more people in the governance system, Catalyst, than in any other decentralized governance system ever in existence. And there's just this fervor of excitement that's building around it. Projects that legit products like Singularity.net and others that are coming on board. I can't, I mean, unless there's some other reason that I'm just not aware of, something political or some reason why Coinbase wouldn't want Cardano on their platform, you'd think that they're gonna have to. I mean, and it just makes business sense for them, right? So I would not be surprised if we see that happen. And one of the number one questions you see all over the social media is, how do I get Cardano? How do I get Cardano? I can't find it in Coinbase, or I can find it. Some people can find it on crypto.com in some states in the United States, but they can't in other states. And again, it's just, it might have been the bottleneck in that might have been the wait for the decentralization, which is happening later on this month. So Arpana Ju, product director at Input Output HK, stresses that it is in the very first steps of Cardano's adoption in terms of blockchain-based applications. Native tokens are a crucial step in the rollout of smart contracts on Cardano, allowing businesses and developers to benefit from the increased security, flexibility, and lower cost that a multi-asset enabled Cardano offers. Over the next few months, we expect to see a range of promising use cases for the utility of Cardano come to life. Additionally, Cardano's decentralization metrics have also increased. As I stated earlier, it's noted here, at present, 88% of the Cardano blockchain is controlled by community-driven staking pools, and that's going to be 100% here shortly. Now, here is something that, I've been studying Cardano and researching it since 2016. And from that time, I was a huge fan of it because of the ideology. I heard what Charles Hoskinson was talking about, what his strategy was, and it was, instead of move fast and break things, it was like go slow, methodological, write papers, get it peer reviewed, test everything, make sure that it works before you release it. If you're going to build the financial operating system of the world, you better be sure that it works the way that you want it to work and that you expect it to work, right? And so I became a huge fan of it. But there's more and more things that are being revealed by Hoskinson and by the Cardano, the IOHK team, that are just blowing my mind. And one of these is, that it is going to be possible for people to create their own tokens, like within the Daedalus wallet at some point in time. There's a command line interface right now. There's a to do this, but you're going to be able to do this within the wallet. And I was just thinking about this. Okay, what does this mean? First, it's going to be native tokens, and then they're going to allow for the creation of NFTs as well. What this means is that, if you don't know, I'm also a graphic designer. I've had a marketing company for 16 years. We do branding for companies all over the US, right? And logos and branding and stuff like that. Now, what this allows for is for people who are artists, for instance, to create a non-fungible token inside the wallet with a graphical user interface that makes it super easy. This is huge. You think about it. This would allow, for instance, for musicians to sell songs with non-fungible token and ensure, that only those people who have purchased the NFT can play that song. Or an artist to create their own NFT tokens for their artwork and then sell it. And it goes beyond even that. You could create, let's say, an item. You can tie an NFT to a piece of property. Let's say we want to partner together, and we're going to go out and open up a coffee shop or something like that. And we want to split up the ownership of it, and we do it we create an NFT that can have 100 shares of that NFT, and then we sell off those shares. I mean, the sky is the limit. I mean, this is incredible. I mean, just think of the barriers to entry that have just been obliterated. Where before, if you were a company and you wanted to create your own token, or you wanted to create, I mean, I don't even know, like, if I'm communicating clearly enough what's happening here so that you guys understand. But when you wrap your mind around it and you actually get what's going on here, the possibility of things that can be done is just mind-boggling. Let's say you're Pepsi even, and you want to create a really cool reward system where, for your customers that buy Pepsi 10 times a month or whatever, they're going to get an NFT token, right? A collectible token to reward their users for going out and buying Coke. I mean, just think of the possibilities there. And then that NFT token can be traded right inside the Daedalus wallet, convertible to ADA, taken to an exchange, real world. I mean, it's gonna be incredible. So this is a blog post from IOHK on building native tokens on Cardano for pleasure and for profit. And that's the thing. I've been thinking about it. My mind is spinning. It's been reeling over the last couple of weeks as I started to recognize some of the stuff that's happening. It's like, what can I do? What kind of NFT can I create? I'm an artist. I can create some kind of NFT and I can sell it. I mean, shoot, I might even be able to sell products as NFTs, right? You want a website, develop a website, create an NFT, or just whatever, for that. I mean, again, I'm just like throwing stuff out here off the top of my head of what. But anyway, with the Mary protocol upgrade, which will be implemented using our hard fork combinator technology, native tokens and multi-asset capability are coming to Cardano. On February 3rd, we upgraded the Cardano public testnet to Mary for final testing. We plan to deploy the Cardano update proposal to mainnet on February 24th, which would therefore deploy ahead of the boundary of Epic 250 and take effect on March 1st. So that's what we just saw that just happen, right, already. Let's see, actually, we're going to scrub down. Why native tokens? Native tokens will bring multi-asset support to Cardano, allowing users to create uniquely defined custom tokens and carry out transactions with them directly on the Cardano blockchain. The use of tokens for financial operations is becoming even more popular. It can cut costs at the same time as improving transparency, enhancing liquidity, and of course being independent of centralized entities such as big banks. Tokenization is the process of representing real assets, e.g. fiat currency, stocks, precious metals, and property in a digital form, which can be used to create financial instruments for commercial activities. Unbelievable. Cardano will provide many tokenization options. With the Mary upgrade, the ledger's accounting infrastructure will process not only ADA transactions, but also transactions that simultaneously carry several asset types. Native support grants distinct advantages for developers as there is no need to create smart contracts to handle custom token creation or transactions. This means that the accounting ledger will track the ownership and transfer of assets instead, removing extra complexity and potential for manual errors while ensuring significant cost efficiency. This is awesome. So future and utility. Developers, businesses, and applications can create general purpose, fungible or specialized non-fungible tokens to achieve commercial or business objectives. These might include the creation of custom payment tokens or rewards for decentralized applications, stablecoins pegged to other currencies, or unique assets that represent intellectual property. All these assets can then be traded, exchanged, or used as payment for products or services. Unlike ERC20 tokens that are based on Ethereum smart contracts, the tracking and accounting of custom tokens on Cardano is supported by the ledger natively. Because native tokens do not require smart contracts to transfer their value, users will be able to send, receive, and burn their tokens without paying the transaction fees required for a smart contract or adding event handling logic to track transactions. And they've even stated, I was listening to an audio podcast the other day from IOHK, that you're going to be able to pay for those transactions in the native token that you've created, and it's going to be correlated somehow to the value of ADA and the value of your token, and that sort of thing is going to happen. They're working to move towards that, which is incredible, right? So in creating an environment for native tokens, we have focused on simplicity of working, affordability, and of course security. So this is going to happen in 3 different ways. I made mention of this already. There's the command line interface. There's going to be a token builder, which will be a graphical user interface, and eventually it will be right within the Daedalus wallet where you'll be able to do these kinds of things. And so just incredible, just incredible. Here's a screenshot from the video of what it's going to look like. You're going to be able to create a new token within the wallet. You're going to be able to put a token name, determine your own token symbol. You can upload an icon. You can create the amount you want. All this type of stuff, and I'm not going to go into the details of this, but this is just incredible if you're asking me. So very excited, very, very exciting stuff. Now I am going to skip over the last segment that I was entertaining today and just call it a wrap because we've been talking here for a while. As always, I appreciate you guys. Please keep coming back. Hit the subscribe button and tell your friends and family about podcasts. Help me get the word out. Help me just grow and help people understand. I think one of the things that keeps people from coming to the cryptocurrency space is just they have this fear and this uncertainty and doubt, the FUD that we talk about, because they haven't quite wrapped their head around what it is and how it works and what can be done, and they just don't understand it, and so they're put off by a lot of the language that's used. And so I'm making every effort to try to make it as easy to understand and to explain these concepts. And obviously, as time goes on, I'll be able to do that better and better and better. And I need feedback from you as well. Yesterday, someone sent me an email and said, hey, the audio was kind of off last couple days, and I really appreciated that. And I knew that had happened, and I took steps to fix it, and I think it's better. It's been better the last couple days. And as I mentioned, I think yesterday, I will, very soon be getting better equipment to make sure that the production quality is at least such that it doesn't prohibit the desire to listen. Anyway, I appreciate your time. I thank you all. I hope you have a phenomenal day. Please come back, visit blockthrasher.com. Have a great day. And remember, it is always a great day to earn more crypto. Talk to you soon. Bye.